Hello and good day to each and everyone. Today I'm gonna discuss to you what is the accounting cycle and how it works. So let's get started. First of all, what is accounting cycle? As expected, business will continue forever, and when there is business, there is also accounting. It processes the identification of transactions until it ends with preparing financial statement. So, the accounting cycle is a step-by-step process performed by accountants to ensure that all financial transactions are properly recorded. In other words, it is also a continuous process of recording and processing all of the transactions of a business. Here are the 10 steps of accounting cycle. Number 1. Identifying and analyzing the events recorded. Number 2. Recording transactions in the journal. Number 3. Posting journal entries to the ledger. Number 4. Preparing the trial balance. Number 5. Preparing the worksheet and adjusting entries. Number 6. Preparing the financial statements. Number 7. Journalizing and posting of adjusting journal entries. Number 8. Journalizing and posting of closing journal entries. Number 9. Preparing the post-closing trial balance. And number 10. Journalizing and posting of reversing journal entries. So here are the steps of accounting cycles as follow. Number 1. Identifying and analyzing the events recorded. In this step, the transactions are analyzed. It starts by beginning to organize all of the financial transactions in order to record it. Accountant will analyze the evidences such as a bill, sales slip, and many more as long as there is an evidence a transaction happened. Here also determine if the business gained or lost and by how much. Number 2. Recording transactions in the journal. This is known as journalizing. All of the analyzed transactions are recorded. The transactions are primarily recorded in the book of accounts. And when there is a transaction, there is always a debit and credit entry. The next step is posting journal entries to the ledger. A ledger account contains data about the opening and closing balances of a particular account. The journal entries are transferred to the ledger. All transactions will test summarize. After this step, this is the step number 4, preparing the trial balance. It is an initial trial balance or an adjusted trial. It will testify the mathematical accuracy of the recorded transactions. The reason you run a trial balance at this point is to ensure that your debits and credits are in balance. The fifth step is preparing the worksheet and adjusting entries. It will prepare an adjusted balance, the journal entry which is given for adjusting accrued and prepared income and expenses to identify the actual financial condition of a business of a particular accounting period is called adjusting entries. The next step is preparing the financial statements. After you fix any out of balance issues and enter any late entries or actual entries, you'll want to run an adjusted trial balance. The financial statement is prepared to identify the profit and loss, assets, liabilities, and owner's equity of a business at the end of the accounting period. The financial condition of a business is determined through financial statements. The next step is journalizing and posting of adjusting journal entries. There are certain transactions that is needed to be adjusted. After preparing the financial statements, you need to record the adjustments. Adjusting entries are prepared at the end of the accounting period to update the accounts of internal transactions because they affect more than one accounting period. This will record the accruals, expirations of deferrals, estimation, and other events from the worksheet. The next step is journalizing and posting of closing journal entries. Closing entries are prepared at the end of the accounting period to update the owner's capital account. This will also eliminate the balances of the normal account so that they may be ready for the next period. So in journalizing and posting of closing journal entries, the necessity of income and expenditure related accounts are finished in the accounting period. Closing entries are given to close the balance of revenues, expenses, and drawing accounts at the end of the year. The ninth step is preparing the post-closing trial balance. After the closing entries have been posted, the post-closing trial balance is prepared from the general ledger accounts. This is necessary to assure that these entries have been correctly posted. This will also check the quality of the debits and credits after the closing entries. So revenues and expenses accounts are accumulated and closed down at the end of the period. When you close your books from the current accounting cycle, you'll zero out both the revenue and expense account balances. The last step is journalizing and posting of reversing journal entries. Reversing entries are prepared to simplify the accounting process. The adjusting entries are simply reversed on the first day of the accounting period. Not all adjusting entries are reversed. Only accruals and deferrals that use the nominal accounts. After the closing entries to be posted, all of the steps will be done in every accounting cycle. It helps to allow efficient process of the accounting process. That would be all. Thank you.